seminars, national conferences, background
Naji Tiwari.
topic where every member, every professional, every GST professional.
I hope my screen is to any customer of any goods if he is replacing any goods under warranty to the customer, whether he will be getting any ITC on that amount or not. Another point which is again a part of notices coming to the taxpayers, that with respect to mismatch of credit between GSTR 3B and GSTR 2A. Next point would be again with respect to cancellation of registration of suppliers. So let us start with the legal provisions. We know that input tax credit shall be allowed with respect to goods and services which are used or intended to be used in the course or furtherance of business. That means if any goods or services which are being used only for the purpose of business, the taxpayer will be eligible to take the credit of that tax paid on such goods and services, subject to certain conditions which are prescribed under Section 16(2) of CGST Act. We have to discuss. There are two aspects to it, which is prior to 1st January 2022 and post 1st January 2022, because there is a major shift in the conditional format of claiming any ITC. Prior to 1st January 2022, Section 16(2) specified only 4 conditions, which were that the tax that the recipient shall possess the tax invoice or the debit note issued by the supplier, that he should receive the goods and services, that the tax should be paid by the supplier to the government, and the recipient has to furnish its return. These were the only 4 conditions. None other condition was specified under 16(2). However, post 1st January 2022, there was one addition to the conditions which specified that ITC shall be available to the extent available under GSTR 2B, which means कि ITC जो आपको मिलेगा वो अगर GSTR 2B में वो इनवॉइस अवेलेबल होगा तो ही आपको ITC मिलेगा, वरना वो ITC आपको नहीं मिलेगा. Another condition which came into effect from 1st October 2022, which stated that certain restrictions which are specified under Section 38 shall be applicable with respect to those invoices which are coming under 2B. So for those invoices, you won't be able to get credit. However, those rules are not yet specified as per government till now. So as of now, we have to understand that there are conditions that the person has to, for the purpose of availing the credit, the person must possess in a tax invoice. What do you mean by tax invoice? He should possess e-invoice in case the supplier is eligible under e-invoice. If the person is not possessing e-invoice but is having a normal tax invoice, that would not be considered as a valid document in the hands of a recipient. Another point which we have is that the recipient must receive goods and services. Let me take an example on that point. If a supplier who is in Nagpur has sold the goods to the recipient in Delhi, he raised the invoice on 31st of March 2023. The invoice were duly reported under GSTR 1 and it is coming under GSTR 2B of the recipient also. However, but the goods were received by the recipient on 3rd of April. Let's take a case that the recipient received the goods on 3rd of April. In this scenario, the SSC will not be eligible to get the credit in March, but will be eligible to take the credit in April. Since he has received the goods, he has fulfilled all the conditions in the month of April. Then while filing the return under April, he can claim the credit in that return. Another point which we have is with respect to payment to the supplier within 180 days. There has been again a certain change in that from 1st of October 2022, in which the recipient, if he has not paid the supplier to the supplier within 180 days, he has to reverse its ITC and shall reclaim the credit once he has made the payment to the recipient. Prior to that, the section specified, section 37, which specified that the tax has to be added in the output tax liability along with interest. However, there is a certain gap in that provision, as the provision states that ITC should be as per GSTR 2. Since there was no return of GSTR 2, there is a question of validity of section 37 in itself. So we have to test that validity of section 37 under the court of law. This is prior to 1st of October 2022. Post 1st October 2022, it is very clear that the recipient has to reverse its ITC and reclaim the credit under its return once he has paid the tax to the supplier. Yeah, one more important point to that. Section 37, this provision of 180 days shall not be applicable in case of import and in case of reverse charge mechanism. This is very important. We have to understand that अगर कोई भी recipient reverse charge की कोई service ले रहा है किसी भी supplier से, तो उस case में 180 days की condition नहीं applicable होगी आपके ऊपर. You can claim the credit of that amount. Now, another question which is prevalent is that whether this ITC we are claiming is actually a right of the taxpayer, or is it actually a concessional benefit being given to the taxpayer? Because altogether the meaning, the meaning or the concept altogether changes if we say that the ITC has been given as a right and not a concessional benefit. In this regard, hello, am I audible? Yeah.
Yes, you are. Yes.
Yes. In this regard, there has been a plethora of judgments prior to GST regime also and post GST regime also. There has been clearly validated point that the ITC is actually a benefit or a concession being given to the taxpayer and not the right. If this benefit and concession is subject to certain conditions given as per the scheme of the statute. So statute can levy any condition which is reasonable condition for giving this benefit of ITC. Once all the conditions are fulfilled, these condition in itself becomes a right of the SSC. So to avail this benefit, you have to fulfill certain conditions. Once conditions are fulfilled, you have the right to avail that ITC. No, that will no more remain a concession or a benefit. So this under GST regime also, this point has been duly validated under Vedanta Limited versus Union of India also, and Tirumala Konda Plywoods versus Assistant Commissioner State Tax under AP High Court. So this point was duly validated under that under these case laws also under GST regime. So I have enumerated certain case laws which were prior to GST. So let us discuss on a particular issue with respect to ITC on construction services. So again, a very important and a very issue driven case in which that if a person is giving renting services, whether he is eligible to take the credit of input or input services on construction of a movable property. As we all know, we a most much awaited case of Safari Retreat is pending under Supreme Court, which, however, Odisha High Court has given a favorable judgment. We are still pending for the decision of the Supreme Court, wherein we shall see what the fate goes with respect to these ITC on construction. So let us discuss certain provisions on this aspect. Section 17(5)(c), which is a section which basically talks about that ITC shall not be eligible on construction of immovable property with respect to works contract services. However, there is an exception to it which states that if the construction is used for if the works contract services or input services is used for construction of plant and machinery, the said ITC shall be eligible, shall be available to the taxpayer. But with respect to immovable property, the same shall not be allowed. Now, what do you mean by plant and machinery? The definition is already given under the GST Act only, which states that plant and machinery means any apparatus, equipment, machinery fixed to the earth by a foundation or structural support that are used for making outward supply of goods or services or both, and includes such foundation and structural supports. But it excludes land and building or civil structure, telecommunication towers, pipelines laid down by the factory premises. These are certain exceptions. What do you mean by that? This exclusion ka for the exclusion hai. What do you mean by that? That if you are getting works contract services or any goods or services with respect to construction of land and building or civil structure, or construction of telecommunication towers or pipelines laid down in factory premises, the same shall not be eligible for ITC. Now, we have to test, since there is no definition under GST with respect to immovable property, we have to test under the court of law, or we have to test through our jurisprudence. What do you mean by immovable property? Section 3, subsection 26 of General Clauses Act have laid down certain laid down the definition of immovable property, which includes land benefits arising out of land or things attached to earth which are permanently fastened to the earth. This is a general definition being given under the General Clauses Act with respect to immovable property. However, this definition has to be tested under the court of law, and the court, the Supreme Apex Court, has duly defined the meaning of
Tiwari sir, any technical problem?
Just we are trying to contact 1 second. I think there is some technical issue. So
No
1 second.
Yes, sir. So
Good to see you back.
I was continuing. Sorry, if I'm joining through another laptop, so they may
No
the
problem.
PPT might be, you might be not be able to see the PPT. So I'll just explain the concept first.
Mhm.
So we were discussing the meaning of immovable property. GST Act has not defined the meaning of immovable property. So we have to refer the definition from General Clauses Act, which states that immovable property includes land, benefits arising out of land, or things attached to earth. So it has given an inclusive definition. So to test this definition, we have certain jurisprudence available with us, which the apex court in the case of Municipal Corp of Greater Bombay versus Indian Oil Corporation Limited in 1991 gave its judgment, in which it stated that if any property is moved or shifted without any dismantling, without any substantial dismantling, the same would be treated as movable, else it would be treated as an immovable property. Another and similar contention was taken by Supreme Court in another case also under Triveni Engineering, in which again it is very clear that the court is very clear that any movement of goods, which involves substantial dismantling shall constitute as a immovable property. Another test to derive the definition is the test of permanency and intention. If the taxpayer has constructed that property with the view of certain degree of permanence, और विद द इंटेंशन दैट कि उसने वहीं पर उसको स्टैब्लिश कर दिया और उसको वो प्रॉपर्टी को वो उसी स्पेसिफिक लोकेशन पे वो लंबे टाइम तक यूज करेगा, देन इट वुड बी ट्रीटेड एज अ इमूवेबल प्रॉपर्टी ओनली, not a movable property. So any ITC for construction of said immovable property will be disallowed. However, into my humble submission in this, what we can do is to get maximum benefit out of this point also, we can categorize those goods or services which are dedicatedly used for construction of any plant and machinery. Then we have to bifurcate those goods and services which are used for construction of plant and machinery and which are used for construction of any immovable property. For example, if we have to in our agreements we have to dedicatedly bifurcate those items which we have to identify those items which are being used for my construction of any plant and machinery, and those items which are used for my immovable property. So to the extent of my those items which are used as for plant and machinery, I can avail that credit, and with respect to immovable property, that would be my cost. So this is all about construction services. However, another point that as I was discussing earlier with respect to ITC, whether I can claim the ITC of this of construction of immovable property if I am giving renting services or hotel services. To my humble submission, what we can do is we can first reverse this. We can claim this credit and then reverse the credit. Reason being, by doing this, we are actually not claiming the credit. We have not taken any benefit of this ITC. However, later on, if any judgment comes, suppose we get a favorable judgment of safari retreats only, then we are eligible to reclaim that credit, because for reclaiming the credit, there is no time limit per se. So it is better that we can do this thing. Another point we are having is with respect to ITC on warranty services. Recently, CBIC has clarified on this point, stating that if a manufacturer is replacing or repairing any goods of any customer which is under warranty, so if the manufacturer he has replaced the good, exchanged the good from older defective product to a new one, whether he will be eligible to take the ITC or not, which is under warranty period, the authority has clarified that yes, he is eligible to take the ITC of that amount. Reason being that they are considering this, the cost of this warranty services is already included in the price of the product. So considering that contention, they are said that this is per se not a FOC supply. The cost of this product is already embedded in the original price of the product by way of warranty. So you are eligible to take the credit. Another point with respect to this is that with respect to extended warranty also. If we have charged any extended warranty from the customer, we have to pay the amount on such extended warranty, and accordingly we need not to reverse any ITC of the goods replaced on under this extended warranty, because again the price is already embedded in the cost of that extended warranty part. So the circular is actually 195/07/2023, dated 17 July 2023. This clarification was being given recently only. Now, most important and very hot topic, because every professional is one or the another is getting this kind of notice from the department with respect to GSTR 3B and 2A. That mismatch of ITC between GSTR 3B and 2A. So in this regard, it is very important to understand the timeline of introduction of GSTR 2A and the relevant changes in the provisions of GST. As in when the GST was introduced on 1st of July 2017, we all know that government brought into a matching mechanism, wherein the government stated that there would be 3 returns, in which GSTR 1 would be the return of outward supplies, GSTR 2 would be the inward supplies, return of inward supplies, and the final return would be of GSTR 3. However, due to any issues that matching mechanism, that returns were never introduced. That GSTR 2, GSTR 3 was never introduced by the government. Only GSTR 1 was introduced. So post this was at the time of introduction of GST. We first post again after August 2018, we saw a new return, which we call as introduction of GSTR 2A. Every person used to see a new return GSTR 2A. Prior to that, we have not even seen what GSTR 2A is all about. So now government brought in a new type of return, wherein it auto-populated all the invoices being given by the supplier, in which the recipient can see all those invoices. Post that on 9th of October 2019, a new amendment came, in which the government said that ITC, to the extent not exceeding 20% of GSTR 2A can be claimed by the taxpayer in case of any mismatch. What do you mean by that? कि अगर मेरे पास 100 रुपए का GSTR 2A में ITC पड़ा है और मैंने क्लेम 125 रुपए किया है, तो मैं एक्चुअली में 120 रुपए से ज्यादा क्लेम ही नहीं कर सकता, क्योंकि उसने 20% की कैपिंग लगा दी थी गवर्नमेंट ने. वो कैपिंग रिड्यूस हो गई on 1st of January 2020 to 10%, which was further reduced to 5% on 1st January 2021. और 1st January 2021 के बाद 2022 में 1st January 2022 से तो हम सभी देख रहे हैं कि गवर्नमेंट ने लॉ में अमेंडमेंट लेके आ गए हैं, विच स्टेट दैट 2B से ज्यादा तो हम क्रेडिट क्लेम ही नहीं कर सकते. So this timeline is very important for every one of us to understand the eligibility criteria for claiming ITC with respect to GSTR 2A. So to say, we can say that whether we can now the question arises that can we is the test of GSTR 2A actually being checked? क्या हमें देखना पड़ेगा, क्या जरूरी है हमारे को वो देखना टेस्ट? As per law, GSTR 2A का कोई प्रोविजन ही नहीं था जो ये बोलता था, कोई प्रोविजन नहीं था कि हमारे को 2A को टेस्ट करना है, हमारे को लेना है 2A के हिसाब से क्रेडिट. So we can take a contention at least prior to 9th of October 2019 कि दो हमारे पास GSTR 2A अगस्त 2018 में आ भी गया था, but there was no provision in the law which said that ITC has to be claimed as per GSTR 2A. This contention we can take while we are replying in our notices, specifically for 1718. 1718 के लिए तो हम ये भी कह सकते हैं कि हमारे पास तो GSTR 2A था ही नहीं. पहली बात है प्रोविजन भी नहीं था और इन इटसेल्फ GSTR 2A भी नहीं था, तो हम किसको देख के मैच करते हैं हम ITC को अपने. So whatever were coming in our books, we have claimed that credit. Now another point is that while replying the notices, we have to prove, in case we come up with the issue that there is a mismatch under GSTR 3B and 2A. In that aspect, another point which we have to take up is that we have to prove the genuinity of the transaction, stating that हमारे को ये बताना पड़ेगा कि जो हमने ट्रांजेक्शन करी है, सप्लाई करी है, वो एक जेन्युइन ट्रांजेक्शन थी, by having tax invoice, payment documents और documents with respect to receipt of goods. कोई GRN अगर issue हुआ होगा at the time of receipt of goods, or details of supplier. These are the documents which we have to submit to prove the genuinity of the transaction. Reason being, it is the burden of proof on the recipient only to prove the eligibility of claim of the said ITC. So while we are replying to the notices, to these notices, it is important that we have to take care of the legal provisions also and the jurisprudence followed by that, and especially the timelines being issued. Because it is in this scenario, timeline is very important. Again, I'm saying again and again, जो हमारा जो इनका प्रावधान था आने का, जो लॉ का प्रावधान था आने का GSTR 2A के बारे में, जो उन्होंने प्रोविजन निकाला, it is very important for us to understand that timeline so that we are eligible to claim the credit. Apart from that, sir, at least to my humble submission, whether we can claim the credit by ignoring GSTR 2A at least prior to 1st January 2022, yes sir, we can do that, irrespective of the fact that there was a rule 36(4) which came into effect from 9th of October 2019. The reason behind that is the validity of rule 36(4) in itself has to be tested under the court of law. कहने का मतलब कि रूल तो आ गया, but there is no section under the GST Act which states that you have to claim the ITC considering GSTR 2A. There is no such section. So rule 36(4) in itself is ultra virus rule. This is my humble submission, but this is again prior to January 2022. All this information is with respect to ITC prior to 1st January 2022, because उसके बाद तो हमारे को क्लैरिटी आई गई कि 2B से ज्यादा हम क्रेडिट ले ही नहीं सकते. Now, just to summarize this point with respect to mismatch and with respect to GSTR 2A and 3B, with respect to notices coming for financial year 2017-18, 18-19, 19-20, 20-21, at least, we can say that there was no provision under GST Act which stated that ITC has to be claimed as per GSTR 2A. We can test this thing under the court of law, and it is a good case to argue, where we can say that yes, हमारे को नोटिस में भी अपने ये रिप्लाई करना पड़ेगा कि हमारे पास ऐसा कोई प्रोविजन था ही नहीं जो 2A जो ये कह सके कि हमने ITC 2A के हिसाब से लेना है. Secondly, 36(4) जो रूल था, that is an ultra virus rule. We should not, because there is no corresponding section which states which confirms this 36(4). So this is another point which we can write in our replies while performing our notices, while replying our notices. Another point is with respect to genuinity of the transaction. See, this is an important point. Reason being that it is the recipient only who has to prove the genuinity of the transaction, the genuinity of claiming its ICD at the end of the day. So for that, while replying to the notices, the SECI must must state all the invoices against which he has claimed the ITC, must give all the documents with respect to like payment of tax. He has paid the tax to the supplier. He has received the goods in the form of GRN. He has he is possessing the tax invoice, the details of supplier. All this information has to be given by the recipient to justify its claim of ITC to the authorities. So this is with respect to mismatch of 3B and GSTR 2A. Another important point which we are getting in our notices is that this the notices which are coming is that the recipient has purchased the goods or services from a supplier whose registration has been cancelled from retrospective effect. This is another point which we are discussing in this issue, and which is a very important point. Again, the reason being there are a lot of notices being coming to the taxpayers, and it is us who has to resolve all these issues. So first of all, before we respond on these notices, we have to understand the reason behind cancellation of registration of any supplier. Section 29 of CGST Act 2017 defines the reason for cancellation of registration, wherein it states that there are two subsections, 29(1), which states a suo motu cancellation by the proper officer or on the application of a registered person in case where the business has been discontinued or where the business has been transferred. In that scenario, another case is with respect to change in the constitution of business. What do you mean by that? That if if earlier the business was in a company, now it has converted into an LLP. In that scenario, older registration has to be cancelled. Or in case where the taxable person, the registered person, is no more liable to be registered under GST. In those scenarios, there was a suo motu cancellation registration, or the registered person can also voluntarily apply for cancellation of registration. However, there are certain cases which is being defined under subsection 2, which is being mentioned under subsection 2, which states that the proper officer can retrospectively cancel the registration. There is no time limit for retrospective date. It is his choice to, as he may deem fit, whenever, till what date he can cancel the registration. So those are the cases. So there are certain cases listed down under subsection 2 of section 29, which state that if there is any contravention to rule 21, we will discuss rule 21 also. If there is any contravention to rule 21 by the registered person, or in case the composition dealer, if he has not filed within 3 months, his GSTR 4, the return which he has filed GSTR 4, he is not filed its GSTR 4 for 3 months, then in that case there is a cancellation proceedings in the hands of proper officer. Or in case where the registered person has not filed its return for consecutively 6 months. For normal registered persons, it is 6 months. For QRMP filers, it is for two consecutive quarters, which is again 6 months. So if for those periods, if they have not filed their returns, then they are liable to their registration is liable to get cancelled. Or if a person who has taken the registration but has not commenced his business within 6 months from the registration, then his registration can be cancelled by the proper officer. Or if any registration has been taken with the if the proper officer feels that any registration has been taken by the registered person through any malified intention of any fraud, willful misstatement, or any suppression of facts while taking the registration, then he has a power to cancel the registration suo motu. Again, this is a retrospective cancellation power being given to the proper officer in these scenarios only. Now, in that case, we have to understand in such scenarios, being a recipient, what do we have to do? As a representative, हमारा ITC तो ताक पे लग गया ना कि हमें ITC नहीं मिलेगा, तो हमारे को अपने ITC को बचाने के लिए क्या करना पड़ेगा अगर हमारे पास ऐसा कोई केस आ जाता है? तो I have taken a very common or important case in this in my discussion is that where the supplier in itself is non-existent. Authorities गई उसकी यहाँ ऑफिस गई, वहां वो उनको मिला ही नहीं, कोई प्रेमाइसिस ही नहीं मिली उनको, या वो कोई बंदा ही नहीं मिला वहां पर उनको. उस सिनेरियो के केस में उन्हें लगा कि देयर इज नो सप्लायर, हेंस कैंसिल द रजिस्ट्रेशन एंड ऑल द आईटीसी ऑफ द रिस्पेक्टिव रेसिपिएंट्स and cancel the registration to retrospective effect. So in that scenario, what kind of response should be filed to the authorities to save our ITC? In that case, again, first point is that being it is our onus to prove the validity of the ITC, so relevant document has to be submitted to the authorities stating, again, as discussed earlier, the tax invoice and the payment of tax invoice, any proof of receipt of goods, that is so to say like GRN or any documents which state that we have received the goods, payment to the transporter. Like if we are liable to pay to the transporter, then any document which substantiate that we have paid to the transport again with respect to these transaction or this particular transaction, the details of the vehicle delivered which delivered the goods, so we should have that detail. So that detail is specifically mentioned on the e-way bill also. Apart from that, this information can be collected from transporter also, the details of the vehicle and the details of the seller from whom we have purchased the goods or services. All these points have been duly testified by the Supreme Court in the case of State of Karnataka versus Ecom Gill Coffee Trading Limited. Merely providing a tax invoice or payment of tax would not suffice the genuinity of the transaction. All these kind of documents culminated together will prove your authenticity of transaction. So it is important to understand this point and respond to the authorities accordingly. So you have to take this matter accordingly. Another point in this regard, which we can state on practical as a practical aspect, that if the recipient has taken a screenshot of the supplier, everyone can verify the details of the supplier. If he has taken any screenshot of the registration certificate of the supplier or the registration detail of the supplier, which states that at the time of transaction the supplier was active, so he can submit that registration certificate that at the time of transaction it was the registration of the supplier was active and I have purchased the goods or services from that supplier. Or another point which we can check from that, we can take the help of GSTR 2A also, which mentions the date of filing of GST return of supplier and GSTR 3B of the supplier, whether he has filed the specific returns or not. We can take that help also and state that yes, the supplier was existent, then only he can file GSTR 1 and 3B. अगर वो existent ही नहीं होता तो फिर बिना registration active के वो returns कैसे file कर सकता था. Another point which we can follow, which we can reply, we can ask the authorities to give us the opportunity of cross examination. Practically, it is the duty of the authorities to regulate these transactions, or to regulate the tax collection or tax to regulate the tax collection and seamless flow. All this has to be done by the authorities. So to catch hold that person is the duty of the authority only. So we can can put one point under our summation that yes, you should give us the opportunity of cross examination so that we can prove our ITC claiming of ITC. Another point is with respect to with there is a very specific doctrine. That doctrine is called lex non cogit ad impossibilia. What does that mean? That law cannot compel doing the things of impossibilities. If a person is not having his office, is not registered, not available, later on, post my transaction, I cannot track each and every person. I cannot track each and every activity of that person, whether that person has cancelled the registration, whether his registration has been cancelled in itself or not. Whether इसका मतलब मैं तो अपना धंधा कर ही नहीं सकता. I cannot do my business. My only duty is to fulfill the documents, fulfill the stomach of the authorities only, to get the document, to check whether the person is active or not, whether he has paid the tax or not. It is not my duty. It is the duty of the authorities to catch hold of any malified activity being done by the other party, not me. So this is another point which we can highlight in our response. Another point which is that we can check. This is a general point which I'm sharing. It is a general point in which we can state that you can check the validity of any DSC or DIN. Is there any DIN or DSC available on the notice or not? You can check that. If that is not available, this is another point which you can mention while you are responding to the authorities. Another point is with respect to if the supplier has not paid the tax. This is another important point against which the recipient is getting notices that since the supplier has not paid the tax, then you are not eligible to get the credit. So you reverse the credit along with interest. In this regard, we can respond to the authorities that with the specific doctrine we have just discussed, that I cannot compel my supplier. I cannot keep an eye on my supplier every time that whether he has actually paid the tax on my behalf or not. It is the duty. While I have paid the relevant amount along with tax to the supplier, my duty is over. I cannot go for beyond that. That is not my scope of work. So it is the duty of the authorities, not mine, to identify whether the tax has been paid by the supplier. The relevant this contention was duly acknowledged and recognized by the Madras High Court in the case of DY Bethel Enterprises, wherein it was stated that that first action has to be taken against the supplier for recovery of any tax and not on the recipient. ये नहीं है कि आप अगर supplier ने tax नहीं pay किया तो आप recipient के पास पहुंच जाओगे जी अपना ITC reverse कर दो. आपको you have to perform all the duties to first catch hold the supplier. If until you are unable to identify, unable to do due diligence, due activity, then only you go to the recipient for this ITC. Prior to that, you cannot touch recipient for this ITC. Similar contention was also taken in the recent judgment under Calcutta High Court under Suncraft Energy also. Calcutta High Court gave the similar judgment in the recent 2023 case also. So this is you can refer these judgments, refer these points while responding in the notices. And another point which you can check that if the supplier has filed its GSTR 3B, you can refer your GSTR 2A. If the supplier has filed his GSTR 3B, then you can state that since he has filed his GSTR 3B, he has paid the tax. So why are you catch holding on me? Because it is important for you, because ITC is yours. It is important to understand that to prove the genuinity of the transaction, that is your part. But whether the tax has been paid by the supplier or not, you have to prove your innocence to the authorities that yes, I have done my part, I have paid the taxes, but I cannot go beyond my reach to force the supplier to pay the tax on my behalf. Neither I can check. either you provide me a mechanism so that I can check the same whether the tax has been paid by the supplier on my behalf or not. You provide that mechanism. If until there is no mechanism, uh, I cannot perform that duty. So all these points
Okay, Manisha.
we can reply, we
th-
can follow while responding to the notices. Yes, sir.
Thank you. Thank you so much for sharing your experience. I hope your knowledge, your experience, your insights will be helping a lot of practicing chartered accountants and the professional GST professionals uh, going through in the GSTs and dealing day to day practice legal notices that the GST department is coming with, all new ideas that they come with, and then every time they come with new things. So we have few questions that our participants have asked. We have approx 730 participants, I think 780 participants at this point. So it's good that people are hearing you and you have been sharing your knowledge. So we have few questions that I'll be asked, that I'll take on behalf of the participant. So first question is, can we get GST credit on construction and installation of water harvesting system in factory?
Sir, again, we have to, this is a fact-based issue. We have to check that what kind of water harvesting system is being installed, whether it can be categorized under plant and machinery. If the structure is in such form that it is a plant and machinery, we can claim the credit. Else, we cannot claim the credit due to, again, we have just discussed the test of permanency, the test of intention while installing that water harvesting system. So these are two, three aspects which we have to understand while claiming the ITC.
Okay, great. Coming to second question, in case of civil contractor engaged in construction of immovable property, is there any restriction on availment of ITC on goods and services procured by the contractor for providing such construction services in its customer?
No, sir. It is very clear with respect to works, with respect to at least services. They have stated that works contractor will get the ITC of all the goods. The section 17.5 in itself has clarified that if a works contractor or contractor is providing its output supply, is eligible to take the ITC of the goods and services, any goods and services which he is procured for providing that output supply. There is no question on that, sir.
Okay, thanks. Third question is whether ITC on normal building maintenance expense is not eligible for input credit. If available, any supporting case law?
Sir, you are saying that building, with respect to building maintenance,
Right.
that if I paid a building maintenance, sir, again, you have to read the explanation. This in the books of account, they are being treated as a revenue nature expense.
Right. It's a revenue nature expense.
Sir, revenue nature expense, there is no barring under of ITC with respect to this amount. We can claim the ITC of this building maintenance, subject to section 16, if it is used in the course of furtherance of business, that we have to test. If it
Okay.
is a corporate building, corporate office, then yes, you can claim the ITC. For residence, no.
Okay. What if it is not a revenue expense? If it is a capitalized
Sir,
expense?
again, capitalized, you have to, if it is a capitalized amount, it is again, maintenance has been defined, has been included in the definition of construction in itself. You have to read the explanation. The construction in itself includes the word maintenance also. So if the maintenance amount is capitalized, and if this same is used for construction of immovable property or maintenance of immovable property, then it would be disallowed. And if it is used for plant and machinery, it will be allowed, sir.
Okay. Perfect. Thank you. Another question is GST input when construction of warehouse for renting will available or not, as this is for in furtherance of business of renting.
Sir, it is an ITC in the furtherance of business, no doubts about that. But we have to wait for the decision of Safari Retreats in this case. Until now, there is no specific ruling. There is one against ruling in this regard, which debars the credit. Till now, only it is Safari Retreat only which is saving us. But again, it is being tested under the court of law only. So we have to wait for the Supreme Court judgment for this.
Okay.
As of now, in this regard, it is better to avail and reverse the credit. As I just discussed, it is in this case, what they can do is they can avail and reverse the credit so that later on, if any favorable judgment comes, they can re-avail this credit because there is no time limit for reavailing the credit.
Okay. Thank you. And last question. Last question is regarding the invoicing that you discussed initially. So the director of the company from his personal account bought a part of machinery from a e-commerce portal, from his personal e-commerce portal account for the company. From his personal account, he paid the payment for his personal account, and the invoice came in his personal name.
Mhm.
Now there are two things. One is he's not GST is not available to the company
Mhm.
because that is a B2C invoice. And another thing is that the invoice is not in the name of the company, so the income tax department or GST is completely disallowing the expense.
Mhm.
Now the company is reaching out to the e-commerce portal, and so e-commerce portal clearly said no, that we will not revise the invoice. The company also made some efforts to find out who is the real seller. They reached out to the real seller, and the similar answer came from the seller, that because it was an e-invoice, we cannot revise the invoice. But invoice can be, as per the GST law, invoice can be revised in 180 days.
Mhm.
Correct? So what are the legalities the company can take, the private limited company can take, to ask them or to force them to revise the invoice?
सर practically एक बारी डिस्कस करते हैं इस मामले को. It is better to raise a credit note and then issue a fresh invoice. अगर हम इसको प्रैक्टिकली हम एस्पेक्ट लेके चलेंगे, लीगल फॉर्म में सर 180 डेज की जो आपने बात करी विद रिस्पेक्ट टू रिवाइज्ड इनवॉइस, सर कंडीशन नहीं मिलेगी आपको लॉ के अंदर. You can specify the section in which it states that yes, any person is eligible to revise the invoice. E-invoice तो सर 7 दिन रिवाइज हो भी नहीं सकता, ज्यादा कैंसिल ही हो सकता है 24 आवर्स के अंदर.
Okay.
There is no option for revision of e-invoice per se.
Okay.
So practically what we are doing is we are saying that कि ठीक है आप credit note issue कर दें and then issue a fresh invoice.
And fresh invoice will be issued in today's date.
Yes, sir.
Okay. All right, that's it from my side and the participant side. Thank you for sharing your so powerful insights. Thank you for sharing your experience. You shared great knowledge on GST, and hopefully it will be really helpful for the participants or all our viewers. So coming to our next speaker, our next topic, I welcome Mr. CA IP Suneet Shah, who is an expert in insolvency and bankruptcy. I would like to give a brief introduction of Mr. CA IP Suneet Shah. He is an experience of 18 years in insolvency and bankruptcy, company audits, bank audits, forensics, etc. He is a qualified insolvency professional, forensic auditor, independent director, and social auditor. He has also delivered multiple sessions on IBC at various platforms. So today we'll be getting a chance to hear from our speaker about the insolvency, get some knowledge, get some insights about how this IBC and works, and his experience and some knowledge. So over to you, Mr. Suneet Shah. We'll be ready to hear you.
Thank you, Sagarji. Thank you so much for inviting me, and first of all, thank you for introducing me. So today's session is all about insolvency and bankruptcy code. That is 2016. The code came into enactment from 2016. So I would say it's a new law. It's a new code that has come up almost 6 years back, 7 years back. But somehow, due to COVID and all, 2 years, I think so, that were not eligible, or that was not applicable. This code was not applicable to the creditors as well. So I would say it is just 4 years old. Effective practice or effective law is into operation since 4 years. But too much have happened into insolvency and bankruptcy code. Almost 4,500 companies have already been into the insolvency, and still we can say, so accordingly we can say that it's although a new law, but too much has happened into the company within a short period of time. Although I would say, Sagarji, 1 hour is too less a time, because insolvency itself is a big law, I would say, and discussing only about the intricacies, or I would say if only of the few sections are to be discussed, we can complete it within an hour or so. To give an entire overview of IBC 2016 in an hour is a challenging task, rather not difficult, but challenging task. But I will try my level best, so that what I will do is, rather than going more into the law part, we will go into the practical situation and the practical cases that I have handled, so that every participant is able to understand the entire process, how this insolvency runs, and how this insolvency is carried against these companies. Sagarji, I would like to share my screen.
Sure, you must be having the access to share.
Yes.
Yeah.
So hope it's visible, sir.
Yes, it is. Please go ahead. Yes, we can see your screen.
Okay, full screen you are able to see it, sir?
We can see some side tabs, all tools. Maybe you can
Okay, yeah, I'll have to
minimize that.
Yeah.
Perfect.
Okay. All right. So, going to brief overview on insolvency and bankruptcy codes 2016. So, this code, insolvency and bankruptcy code, has come into enactment from 2016, as discussed. How it runs, how has been initiated, what are the adjudicating authorities, who are the courts, who are the stakeholders in this insolvency and bankruptcy code, I will be discussing very quickly and very comprehensively in a practical manner, so that everyone gets to know how process is being done. I have divided this session into 6 parts. That is overview on IBC, procedure of admission of insolvency of a corporate debtor and the demand notice, CIRP process, how it is run. If CIRP process gets completed and if that company is not taken over, how the liquidation process kicks in, what are the eligibility criteria to become an IP, and its professional opportunity. I think so. 5th and the 6th portion, I think so that might not be very much into the comprehensive part or in detail. So much importance I am trying to give onto the CIRP process and the liquidation process itself. So, overview on IBC, which involve a milestone in Indian economy to boost ease of doing business. So, when Modi government has taken over since last 10 years, they have always tried to have the ease of doing business in India. And I would say insolvency and bankruptcy code is one of this tool, or one of the codes that has been enacted, which will lead to ease of doing business processes in India. What are the objectives of the IBC code? First of all, we go to the objective and then we go to the processes part. It leads to clear and speedy process for early identification and resolution of financial distress for corporate and LLPs. Thing is that I would just brief it. If a company is into the insolvency, is all about the stress that company is facing, because there are so many reasons, because of the financial stress, or there might be the employees turnarounds, or anything that is with the creditors, their debtors default, and even if they are not able to pay to the creditors well in time, or if there are any displacement in the company, all these stress, this all leads to the stress into the company, and because of this stress, the company might be facing several issues of the financial crunch as well. So once this company starts facing this financial crunch, it becomes difficult to run a company, and that's the reason any of the creditor of the company to whom this company owes the fund, if that company is not paying the dues to the creditor, that creditor has all the rights to go against this company and file an insolvency and bankruptcy against this company. So this is the basic, I would say, this is the basic core fundamental of this insolvency and bankruptcy code, where there should be a default amount and where should be a creditor to whom the company owes a fund. So creditor will go against this company and file a suit or file an application against this company to take this company into the insolvency and bankruptcy code. As we go through the process, everyone will realize how the company which was owing only a say amount of rupees 5 crores to one of the creditors, and say a company's net worth is about say 200 crores, 300 crores, and even a small amount of say 1 crore to 5 crores, if it is owing to any of the creditor, if that creditor drags that company into the insolvency, what are the repercussions of the company that will go through into the process part. This is a chart. As I discussed, it's a liquidity problem that starts in a company. There, because of it, there has to be a delay in operation, delay in payments, disruption in operation, and due to which there are operational losses and company becomes sick. So, and ultimately there is a complete erosion of the network. So once the company is having the erosion of the network, the company becomes weak, and the first thing that company is unable to do is unable to pay the debts to the creditors or to the bankers to whom it owes, from whom that company has taken a loan or any of the funds from the banks. Benefits of this insolvency. So once this company is being dragged into the insolvency, there are fair chances that there will be a time-bound settlement. So having shown into the balance sheet that this company owes a amount to any of the creditors, it's better to take this company into the insolvency and have a time-bound settlement. Either this company will go into the settlement part, or it will go into the resolution. Resolution meaning thereby this sick company or this insolvent company will be taken over by any other company, or if there is no buyer for such a sick company, this company will finally go into the liquidation. So these are the benefits, I would say, because of all this insolvency process that will lead to the protection of the workers as well. This will lead to faster turnaround of business, and it will lead to shift from the equity to the debt portion. Also, it will lift to the lender's comfort, because if the lender is lending to the company, in that case lender is always assured that his money is safe. In case his money is not safe, if that amount is not being paid to the lender, he always has a resort to the insolvency and bankruptcy court, and he has all the chances, all the authorities to take this company into the insolvency part. Now bit onto the provisions of the Insolvency and Bankruptcy Code 2016, where it is applicable. It is applicable as of now to the company incorporated under the Companies Act. So a company, maybe a private limited company or a limited company, and second is LLP incorporated under the LLP Act 2008. So these two categories of companies and the LLPs can be dragged into the insolvency, meaning thereby, as of now, although it has been prescribed into the act, but it has not yet well been notified, where the persons or the partnership firms can also be dragged into the insolvency. So if a partnership firm or if a individual person is owing something to the banks or to the individual lenders, in that case, if these individuals or the partnership firms default into payment of this amount, in that case the insolvency cannot be initiated against such individual or the partnership firm. So right now, a company, whether it be a limited or a private limited company, and a LLP can be dragged into the insolvency in case of a default. There has to be a default to initiate or to take that company into the insolvency. This is a short journey of IBC, how it happened on December 2016. This code came into the effect. January 2017, the first case of Innovative Industries was admitted by the Mumbai NCLT bench. This was the first case that came into India. 13 June 2017, RBI shortlisted 12 companies for insolvency proceeding. Fourth is about the 2017, IBBI introduced Form F for submission of claim by creditors other than financial creditors, and also amendment, and like all other laws and all other acts, so many amendments have taken place. The first amendment came into March on March 12, 2020. So this is the short journey of IBC. Okay, now we move on to section 4. Sagarji, I might be a bit fast, I am aware of this, but this is because I wish I should complete the entire process of IBC within the well designated time I am having. So that's the reason I might be fast. If in case of any queries, we can take it at last, sir.
Sure.
Yeah, so threshold limit under IBC, when this insolvency can be initiated, it under section 4, there initially there was a limit of 1 lakh. Say I owe to say Sagarji has given me a loan of rupees 1 lakh. If I am unable to pay, if I being a company or a LLB, if I am not able to pay, Sagarji can file a claim, insolvency proceeding against me, my company, that is. This was the limit as prescribed in section 4 of the IBC code. However, due to COVID that was hit in 2019, immediately 2020 rather. So 2020, when the COVID hit the entire nation, in that case, immediately the government came out with a provision, with a notification stating that now the threshold limit was increased from rupees 1 lakh to 1 crore. So Sagarji, if I owe to you rupees 1 lakh, 5 lakh, 10 lakhs, you cannot initiate an insolvency proceeding against my company. However, if I owe to you rupees anything above 1 crore, and if I am having a default, means if I am not paying, in that case, you can initiate an insolvency against my company. So this is a threshold limit under IBC under section 4 of this code. Why this limit was raised from 1 lakh to 1 crore? The only reason was that because of this dreadful COVID that has hit the country. In that case, the entire MSME small sectors were under trouble. They were facing several liquidity crunch, and if this insolvency was to be continued with rupees 1 lakh, in that case, many of the SMEs or many of the small and medium-sized companies would have been thrashed and would have been taken to the insolvency. And that's the reason government came immediately after this COVID hit with a notification stating that this limit will be increased to rupees 1 crore. So this was the notification number, which was immediately, so like on 24th of March, 20th, 21st of March, 24th of March, when the COVID hit, immediately that government came in, and 24th of March itself, the limit of rupees 1 lakh was made to rupees 1 crore. So now we have come to a stage where my company owes to Sagarji rupees, say 1.25 crores. In spite several reminders, in spite several notices Sagarji would have given to me, my company is not paying this debt owed to him. In any case, in such case, what happens is Sagarji will move to NCLT stating that filing an application through an authorized representative or through a lawyer or by himself, he can file an application against my company with the NCLT stating that I am not paying the dues. In that case, what will happen is I will get a chance, as usual in all laws, a chance of being heard is given. So I will be given a chance to prove my innocence or the reasons why I'm not able to pay the amount due to Sagarji. In that case, NCLT will have a due hearing, and if NCLT is of the opinion that I am like trying to avert this amount because of no good reason, and if NCLT is of the opinion that this company is fit case for NCLT, will admit my company into the insolvency and bankruptcy court. Who can initiate insolvency against my company is the financial creditor, operational creditor, and the company itself. That is section 7, 9, and 10. Section 7 says that if the amount is due to any of the person, in that case, if I owe to Sagarji, say 1.25 crores, means he has given an actual loan of rupees 1.25 crores to me. In that case, he can initiate a Section 7 application against me, which will be he will be called a financial creditor. However, if Sagarji has given me, say he is a chartered accountant, if he has given me a services of getting my books audited or any of the consultancy services that he might have given me, and if my company is not paying, in that case also he can initiate a insolvency proceeding against me, provided the amount is about rupees 1.1 crore. In that case, the application file will be filed under Section 9 of the code, which is, so he will be called as an operational creditor and not a financial creditor, because he has provided services to me. Similar is the case when a company has given goods to me. So in case of there is a default for goods and services, in that case Section 8 application will be filed and not the Section 7 application. And the third one is about the Section 10, that is the corporate debtor himself. So if I am of the opinion that no, I cannot pay the dues, I am in a financial stress, and if no one is initiating an application against me, I myself can also apply to NCLT stating that, okay, I am now unable to pay my dues and I will be going I'm filing an application under Section 10 to declare myself as my company as insolvent and then start with the proceeding. And another case, one more case is the non-default case, where there are no default, but there are no defaults in the company, there are no assets in the company, no liabilities in the company. In that case also I can apply to adjudicating authority, that is NCLT, to file a voluntary liquidation in that case, and my company will be liquidated and it will be striked off from the ROC registers. This I already discussed in detail: financial creditors, operational creditor, and the corporate debtor himself. Not going much into the definitions of the financial creditor. As I said, financial creditor is the one to whom I owe actual amount of funds. So like bankers, like or any of the unsecured loans I would have taken, or I would have taken secured loans from the bankers, those amount actually I have taken, those will be called, so banker will be called as a financial creditor, and they can file a application against me in case I am not, my company is not able to pay the dues. Operational creditor, as again discussed, one, the creditor who has provided goods and services to me, my company, and if I am unable to pay the dues, if that default amount is more than rupees 1 crore, again operational creditor can file a insolvency proceeding against me. So this is much in detail about the operational creditor. I think I will skip this slide. So yes, now we go on to the process. So once this insolvency proceeding, NCLT, so I would say NCLT is the adjudicating authority to adjudicate the entire matters of insolvency and bankruptcy court. So once NCLT is of the opinion that yes, now this company is not paying anymore, they have reason to believe that this company will not pay the debt, in that case the company, NCLT, will come to a conclusion and order a insolvency commencement against my company. So the moment insolvency commencement happens, operational creditor or the financial creditor in that application states the name of the insolvency professional. So myself, insolvency professional, so one creditor might appoint me as an insolvency professional to go against the company, and once this NCLT order is done, insolvency professional who is named into the application will take over the entire charge of this company. Even the directors of the company and the board of the directors of the company will be suspended. They don't have rights to sign the checks, they don't have rights to make a business, they don't have rights to make a purchase sale of any of the goods into the company, they cannot sell any assets. So there will be a complete moratorium under Section 14. So moratorium meaning thereby no actions can be taken against this company or by this company. In any case, there will be no operation that can be taken over by the older management, and the entire management will be taken over by the insolvency professional. Insolvency professional, once he gets the order, he will just make an public announcement in the newspaper as well. Immediately within 3 days, we have to make. So once we will make an public announcement in 2 newspapers, we have to make one in English newspaper and another in the vernacular language where this company's registered office has been situated. So once this public announcement is done into the newspapers, immediately the entire class of creditors will come to know, the bankers will come to know that this company is into the insolvency and no operations can be done again with this company. Right. So and this announcement will be like that ki this company is now into the insolvency. I am acting as an insolvency professional, and if any of the company or if any of the individuals or the bankers are having claim against this company, they can file claim with the insolvency professional. So all the claims will come to me, and I will have to analyze and start vetting the claims if the claims are correct or not, and I have to admit those claims. So once this admission is done, the public announcement is done, then the claims will start coming in on the basis of the public announcement, and I'll vet the claims, and if I'll I'll constitute a committee of creditors. So all the claims that I have received, I have vetted the claims, and I'll form a constitution. I'll constitute a committee of creditors. Committee of creditors will compose of only of the financial creditors who will have the right to vote into the meeting, and all the operations that will be taken or all the operational the decisions that will be taken during the insolvency process is going on. So once insolvency professional has done all the public announcement that as required by the act, I will also intimate to all the authorities like ROC. I will also intimate to the GST department. I will also intimate to the income tax department where the jurisdiction of this company was. I will intimate to each and every creditor whatever data available with me, that the insolvency has been started and you need to file the claim with me, and no operations can be done with this company. I will write the letters to the bankers as well, that now I will be acting as an authorized signatory, and no further transactions, debit or credit, will be done into the company's bank accounts as well. So you all would come to know that even the bank account might possess say 5 crores of balance. That balance cannot be used. Not even a single 500 rupees check can be issued by the director of the company post this order have come up. So this is the huge impact of the insolvency. So entire operations are out from the director's hand, and this lies with the operational credit with the insolvency professional. I will have to take the charge. The third point that we see is taking the charge of the assets of the corporators. So I will try to get or fetch the data from the public domain, from the ROC, from the MCA data. I'll try to fetch the balance sheet, try to see what were the assets of this company, and all the assets of the company located anywhere in India. I will have to take, I will not try, but I will have to take the charge of the assets of the company, and that assets will lie within my custody, within the custody of the insolvency professional, and no one can have access to such fixed assets as well. When I'm taking charge of all the fixed assets or whatever be the plant and machinery of this company, in that case, I will also be responsible for taking due care of the assets of the company. So I will be responsible for the insurances of the company to ensure that there are no theft into the company, there are no theft of the plant and machinery, or any of the assets that have been movable assets that have been located into the factory premise or the offices of the company. Even the cars of the company, if the company is possessing the cars, like having the ownership of the cars, say 1, 2 or 5, I will have to trace them, and I will have to take away those cars from the directors and keep those keys with me. This is the kind of the impact of the insolvency that will initiate after this default has been done. This is the in detail what public announcement will constitute. Public announcement, as I said, will be done. Say a company which is going into the insolvency is situated, or its registered office is in Mumbai, which is Maharashtra. In case of Mumbai, the company is going into the insolvency. I, as an insolvency professional, has to publish the public announcement in Mumbai or the nearby areas where the company's operation was going on. This insolvency notice of public announcement will go in two newspapers. One will be English, that is standard, and second is the Marathi newspaper, because the language of Maharashtra is Marathi. So one in Marathi newspaper and another one in the English newspaper. I'll have to publish this announcement. These are the details of how this public announcement will look like and what it should actually compulsorily include. So not to get more into the details of the formats of the public announcement, I have already discussed intimation to various authorities. So all the authorities, as an insolvency professional, I'll be responsible to intimate to income tax department, to GST department, ROC, NSD and NSDL and the CDSL. Also, I'll have to intimate if that company was a listed company at during that time. If that company was a listed company, I'll have to also intimate to the SEBI as well about this insolvency has been initiated against this company. If that company is possessing the website, I'll have to take over the credentials of the website from the directors of the company, and I will also have to input the message on to the front heading of the website stating that this company is undergoing an insolvency process, and any of the creditors willing to file a claim, if there was a claim, can file with the insolvency professional. Taking charge of the assets of the corporate creditor, as I said, all the assets of the company, whichever appearing in the balance sheet and wherever located, I'll have to take the charge of the assets of the corporate debtor. Receipts of the claim, on the basis of the public announcement, all the claims will be forwarded to the insolvency professional, either in the electronic mode, that is through mail, or either in the physical format. However, the financial creditors, as discussed, have to compulsorily file their claims in the e-format, that is the electronic mode through mail. Physical, just filing of the physical claim with the insolvency professional is not allowed. Also, operational creditor has a chance or has a option to either file the claim in e-form or either to file a claim in the physical format. So this accordingly, even the government can file a claim, even the GST department can file a claim, even the income tax department can file a claim with the insolvency professional if there were certain demands against this company which were left to be paid by the company, and in insolvency professional, insolvency has been commenced or insolvency has been initiated. On the receipt of the claim, again, as discussed in short, that I will verify the claims on the basis of the available data that I have. Generally, it happens that directors, when their company is already going into the insolvency and charges have been taken over by the insolvency professional, so generally they are non-cooperative. Never they try to cooperate. So getting the data itself is a big challenge. So I will try to get the data from wherever available domains, and I'll try to verify all the claims that have been received from the government departments or the operational creditor and the financial creditor. And after vetting and the verification of the correct claim, I will admit their claims. And in case there are any queries, I could just mail them stating that there is a discrepancy in the claim file and your credit amount as appearing in the balance sheet of the corporate debt. Next is the constitution of the committee of creditors. I will constitute the committee of creditors on the basis of the claims. So once claims have been finalized, all the financial creditors will form part of the committee of creditors. Although operational creditors can also file a claim, 500 rupees का भी claim आ सकता है. उसके बाद कोई limit नहीं है like 1 crore or 1 lakh rupees. उसके बाद if someone is having a due of, say, rupees 5,000 rupees, in that case also they can file a claim. So all these claims can be filed with the insolvency professional. Financial creditors के claim जो है, that only will form a constitution that will become a part of the committee of creditors for taking further decisions into the company and having voting rights into the committee of creditors. So once this COC has been constituted, so COC along with the insolvency professional will start taking decisions as to what this company has to do now. So if that company is a going concern, say if there are chances of a going concern, say purchase and sales can be made, the employees can be retained. So we insolvency professional or the committee of creditors cannot shut this company. They have to keep this company as a going concern. So purchases will take place, the sales will take place, all the expenses will be made. That all expenses and the purchase sales will be made from the company itself, and all these decisions will be taken by the financial creditors who are forming part of the committee. So insolvency professional will put forward their proposals to the committee of creditors, and committee of creditors, according to their voting share, will vote upon the resolution and discuss or pass the resolution stating that yes, this is to be done and this is not to be done. So accordingly, these decisions will be taken. There are various percentage of voting has been described, like 51% voting has been described for few matters, 66% of votings have been required for some important matters, and 90% even the voting share or voting right is required for passing of certain important resolution, like withdrawal of the corporate debtors, like withdrawal of the insolvency. जो insolvency start हो चुकी है, if you want to withdraw this insolvency proceeding, then in that case 90% voting will be required to withdraw this insolvency process. So all these members meetings, there are no fixed number of meetings that are to be held by the COC. That is, COC means here committee of creditor. So there are no number of meetings prescribed, but yes, as and when required, as and any decisions are to be taken, then insolvency professional may call for a COC meeting, or COC can also intimate insolvency professional to conduct a COC meeting where important agendas will be discussed and voting or the resolutions will be passed. Now we go on to the insolvency professional. I was naming it, so I would again differentiate between it. So first of all, for a first 1 month, the insolvency professional is called an interim resolution professional, and after 1 month, again on his reappointment, he will be called as a resolution professional. So there's a terminology difference. First 1 month is an interim resolution professional, that is IRP, and in the second month, once he is reappointed, he will be called as a resolution professional. That will be that is called a RP. Duties have already been discussed. They need to preserve and protect the assets of the corporate debtor. He will have to prepare the entire information memorandum, and he will have to get the valuation of the assets done. So a valuation of the assets will constitute three parts, that is plant and machinery, the land and building, and the securities and financial assets. Securities and financial assets meaning thereby all the investments of the company, the current assets of the company will also have to be valued by the insolvency professional. So valuations of this corporate debtor, the company already into the insolvency, will start. So accordingly, the information memorandum will be prepared by the insolvency professional stating that these are the assets and these are the liabilities of the company. Liabilities of the company will be the claims which have been received by the insolvency professional on the basis of the public announcement, and the assets of the company will be the assets which have been traced by the insolvency professional, which have been handed over by the director, or any of the assets that he would have come across. So the assets and liabilities information memorandum will be prepared by the insolvency professional. Now we go to the next step. Is once the information memorandum has been prepared, the valuation of the company is being done. Again, there will be a public announcement to the effect by the insolvency professional in Form G. He will again publish a public announcement stating that now this company, insolvency company who is undergoing insolvency, is into the sale, right? So any of the company, any of the potential buyers who wants to buy this company can come forward, can submit their expression of interest, can submit the resolution plan, and can try to take over this company, obviously subject at a price, and that price they have to quote the price in the resolution plans on the basis of the advertisement that will be published, and they need to submit a resolution plan stating that okay, this is the amount that we will be paying for this company, and we will take over entire assets and the liabilities which were been prescribed in the information memorandum. So all these resolution plans will come up, and resolution plans accordingly will be these resolution plans can be submitted by the financial creditor himself, who is also a part of the committee of creditors, can be submitted by a operational creditor, or any of the other buyer can submit. And because this is a public advertisement open to all, any willing buyer can come up and buy this stress asset which might be available at a discounted price or at a good price. So they will have to submit a resolution plan. There is no limit onto the number of resolution plans. So n number of resolution plan might have been received, and there is no limit as to how many what is the amount with, there is no threshold limit that will be prescribed into the advertisement that a person ABC has to prescribe X amount into the resolution plot. It's not like that. Although the valuation that insolvency professional would have been done would have say amounted to rupees 50 crores, in that case any resolution applicant can come up and bid for say 5 crores, 10 crores, 15 crore or 100 crores, whatever he thinks fit. Okay, this is the worth of the company, he can bid accordingly, and there is no bar to it as to that this is the threshold limit for submitting their resolution plan. So all these resolution plans will be coming up to, and they will have to be submitted within the due deadlines as stated into the form G or to the public announcement, and they will be again accumulated by the insolvency professional, and they're checking verification whether these resolution plan are as per the law IBC code or not, or whether they satisfy the various rules and regulations of the insolvency and bankruptcy code. So all these verification and checking will be done by the insolvency professional, and those resolution plan will be put forward. They will insolvency professional will call a COC meeting, and they will put forward this this resolution plan amongst the COC members for their approval. Going to these ineligibilities, there are certain ineligible resolution applicants who cannot submit the resolution plans. So as I said, each and everyone is free to submit the resolution plan on the basis of the public announcement or the public advertisement. But however, if some person or the potential buyer is an undischarged insolvent, if he is a willful defaulter, if his own account has been NPA, he has been convicted of offense, or he has been disqualified to act as a director or prohibited by SEBI, all these, there are ineligibility criteria as mentioned in section 29A. So section 29A and ineligibility will lead the potential resolution applicants not to come forward and to submit the resolution plan. So all these eligibility criteria will be verified by the insolvency professional as well. Resolution professional will verify all these details, whether all the plans are eligible or not. So this is one of the criteria that they will check, stating that resolution professional applicant, those who have come up to buy this company, are not ineligible as per section 29A. According, a list of the final resolution applicants will be made, and they will be resolution plans will be put up for the approval by the COC member. So what happens next is I will call the COC meeting, and RP will call the COC meeting. He will put up all the resolution plan which are already vetted and which are as per the law, and will put forward to the COC member stating that whether you wish to approve these resolution plans or not. Definitely, there might be, as I discussed, any amount can be inputted by the resolution applicant into the resolution plan. So there might be a valuation of say 50 crores with the resolution professional, but the plans might have come of 5 crores, 10 crores, 15 crores, 30 crores, 50 crores, and 100 crores, and so on. Right? So all these plans will be put up with the COC, and naturally the best of the plan will be selected by the committee of creditors, and 66% voting has to be done on a particular resolution plan, stating that they want to go for this resolution plan and sell this company which is already into the insolvency to the resolution applicant who has come up for buying this company. So this is a cardinal rule, or natural. It's on a very simple logical thing that, and the best plan means the amount which is offered the best will be selected by the committee of creditors as the best resolution plan, and they will be selected, and resolution process will be taken forward. Now the question arises is to what if none of the person has come up for taking over this company as a resolution applicant, and if all these resolution applicants fail to meet the criteria, or these resolution applicants have put up the price which is not acceptable to the committee of creditors. So what in that case, committee of creditors will reject all the resolution plans and attempt, or and they will approve a resolution stating that now we don't want to sell this company because no eligible resolution applicant has come up with a good price. So we can't accept this plan and we need to reject all the plans that have come up or put for voting. So they will reject all those resolution plan and opt to go for or to resolve to go for a liquidation process. So once this entire CRP process, I would like to say that it has to be completed into the maximum period of 180 days. And once this 180 days have been over, if this process is not completed within this 180 days, suo moto, this company will be moved into the liquidation, or an extension will have to be taken, or a permission will have to be taken from the adjudicating authority, that is NCLT, for further extension if required. However, if that company is not resolved within the period of 180 days, in that case, a liquidation process will start for this company. So now we are out of this insolvency process. Now we are moving on to the liquidation process. So again, the liquidator will be appointed. So terminology will change, and this now company is into the liquidation. So naturally, a liquidator will be appointed. To make you all aware, insolvent interim resolution professional, two resolution professional, two liquidator. So resolution professional can act as a liquidator into the company, this insolvent company as well. So same might be appointed as a liquidator, or some other person or some other IP might be appointed as a liquidator of this company to carry on the liquidation process. So same process again, liquidator. Once liquidator has been appointed, he will again give a public announcement into the newspaper stating that this company is into the liquidation, and if someone has to file the claims against this company, you can file the claim against this company, and he will prepare a preliminary report of this. So here the terminology will change. So all the creditors who have filed the claim again, and the previous claimants who were already into the list as a creditor, they all will form a part of the committee, and this time they will not be called as a committee of creditors, but they will be called as a stakeholders committee. So liquidator along with the stakeholders committee will start with the process of the liquidation, and immediately will start to sell of the assets as prescribed under the provisions of this code. So at this stage, I would like to get the difference between the insolvency process, that is a CRP process, and the liquidation process. In CRP process, the entire company was being sold. So all the buyers, they were coming, they were willing to buy over this company. But in the case of liquidation process, piecemeal distribution or piecemeal sale of the assets will be done. So naturally, the company, if that company is sold through a resolution process, in that case, the entire company along with the assets and the liabilities goes to the new buyer. And if this company is sold through a liquidation process, in that case, the company is not sold, but the individual assets will be put up for auction. Say a company is having a land, so liquidator will put, say, land for the auction. Second is plant and machinery. They will put some, even in plant and machinery, they can have a piecemeal distribution. There are 10 plant and machinery, 5 plant and machinery, he can come out with the auction of those machinery. 5 other machinery, he can sell it at a later date. So all these kind of processes will be done into the liquidation. So there is a difference between a CRP and a liquidation, that the entire company is sold, and in this liquidation process, this piecemeal assets or part to part assets will be sold by the liquidator through a public auction. Okay, so now we are done with this insolvency and liquidation process. I would go through the waterfall mechanism. So once this amount has been, this company has been sold, or the liquidation process has been done, wherein the auction process is completed. So naturally, through auction, the amount will come to the liquidator. The price at which these assets are sold, or the price at which this company is sold through a resolution process, how to distribute this amount that has come to a resolution professional or a liquidator. So a waterfall mechanism under section 53 of the code has been prescribed, which states the manner in which this the proceeds that have been received will be distributed amongst the stakeholders. So there will be creditors who might be waiting to get these funds, So naturally, there's a mechanism prescribed. So first of all, insolvency resolution process cost and the liquidation cost, including the IRP, RP fees and the liquidator fees will be paid, and all the incidental expenses that will be paid first. Then to the secured creditors who are backed by the security. So the secured creditors will be paid. Then along with that, the workman dues will be paid. So they rank at par. Secondly, will be the employees' dues will be paid. Then comes the unsecured creditors, then to the state governments, and remaining if any dues to other creditors as well, and then to the preference shareholders. And if something remains, that can go to the equity shareholders. So this is the mechanism, this is the waterfall mechanism prescribed, but the distribution of these proceeds cannot be overlapped or cannot be missed. Like you cannot miss secured creditors and just pay first to the unsecured creditors. So first of all, this flow has to be maintained. If secured creditors are paid in full and if the amount is remaining, then the amount will go to unsecured creditors. If the company's sale amount or the company's asset sale has not fetched such a big amount equal to the credits, whatever claims that have been received by the RP or the liquidator, in that case secured creditors will be paid, or फिर कुछ पैसा बचता है, or if something remains in hand, then we'll go to the another creditor, which is the unsecured creditor. If that is extinguished at that stage, then unsecured creditors, the government dues or any other professional equity shareholders will not get any of the amount, and the insolvency process will get over. So as I discussed in the beginning, that we will see the impact, the consequences. So we started with 1 crore dues, 1.25 crores my company was unable to pay to Sagarji because of the liquidity crunch that I was having. So you can see the impact from which stage that insolvency, just I was not able to pay 1.25 crore. Sagarji took me to my company to the insolvency process, and this entire company is out of the hands of the director. And now the stage is that the entire assets of the companies are being sold, and the directors, the board of the directors and the shareholders are all out of this company. Even the employees are out of this company. This is a huge impact of not paying the dues, which are actually the companies owes to any of the financial creditors or any of the creditors as well. So this is a huge impact of the insolvency and bankruptcy code. So there is a fear now. There is a fear if my company will not pay to the creditors, there are fair chances that that creditor will take me to the insolvency, will drag me to the insolvency process, and I will have to face all these consequences, that my company might go out of my hands and will be sold by the insolvency professional. All the assets of my company will be sold by the insolvency professional. So this accordingly, I will be out of the business, I will be out of my assets, I will be out of my company. This is the big impact of the insolvency process this code has brought in. Eligibility criteria, Sagarji, if hope I'm having some time, right? So within 5 minutes, I will discuss the eligibility criteria, how to become an IP.
That is much required, right?
Yes, sir. Yeah. So how to become an IP? Is there are qualification as again prescribed by IBC code, which states that if a individual who is qualified chartered accountant, or who is a qualified lawyer, or who is a qualified CS or ICWA, these 4 categories of professionals can opt for becoming an insolvency professional if they have completed 10 years of their membership with their respective institutes. So if once, so 10 years is a base minimum criteria. Once 10 years have been completed as a member of the institute, or maybe a CA institute, CS institute, ICWA, in that case, or maybe a lawyer, so bar council. So all these practitioners who have completed 10 years of membership, then they can opt to go for appearing for this examination. And that's a self-learning that can be done, and online examination are conducted by several centers across India. So they can go for this examination, and post this examination has been qualified, 60 marks is the passing for this. And there are negative markings in this examination as well. Once this examination has been completed, you need to have 50 hours of training that have been conducted by insolvency professional agencies, or all these insolvency, there are IPAs, insolvency professional agencies, who conduct 50 hours training. You need to qualify that as well. And once that has been done, you can be qualified as called as an insolvency professional and can start practicing there on. However, what if I would say, what if someone is not been qualified as a chartered accountant or is not a CS, ICW or a lawyer, whether they will be able to go for or can become an insolvency professional? The answer is yes. In case a BCom graduate or a MCom graduate person wants to pursue insolvency, right, to become an insolvency professional, in that case the criteria are something different. In that case, he should have completed 15 years of experience in management. So he should have served in any of the companies as in the post of as a managerial post or above. Minimum 15 years required in that case if he is not a CACS, ICW, or lawyer. In that case, they need to have this much experience. In that case, they will be able to appear for this examination and can qualify this exam and become an insolvency professional. So these are the qualification exam of the examination or to become an insolvency professional, a registered insolvency professional, where professional assignments like this, taking charge of these companies, can be started with. So this is a big professional opportunity that has come up for the professionals like us, and those who are not qualified chartered accountants or CS. They can also have their 15 years of experience as a managerial post and can go for this qualification and becoming an insolvency professional. I think so. There are I think so. You can make out what are the professional opportunities that will emerge, because the entire process I have narrated before you all. So naturally, when this company is taken over by the insolvency professional, he is not relaxed or he is not exempted from making all the compliances to this effect. In any case, he has to go for the accounting, he has to go for the auditing, he has to go for the secretarial parts. All these things he has to do what the running company is being doing. So naturally, even the insolvency company, the CRP process wala company, once I take charge or RP takes charge of this company, they have to do all these processes. They have to get the valuations done. So naturally, valuer's scope has increased. Insolvency professional appoints valuer. Also, there has to be a forensic audit done for these companies as well. So naturally, we start appointing forensic auditors. Forensic auditors accordingly have good scope because of the insolvency and bankruptcy code. All the other things, all the other related activities like taxation, the share valuation work, all these have to be done into this insolvency. Although the company is suffering or company is undergoing insolvency, all the secretarial works have to be done. So we appoint company secretaries as well. We appoint the managers as well who will run the entire show of this going concern company. So all these things have been the additional opportunities that have come up because of this insolvency process taking place. We also appoint chartered accountant firms or the CS or the lawyers to give us services like vetting of a resolution plan. So once the resolution plans comes in, we take support services from so many professional firms as to whether these professional resolution plans are as per the law or not. So all these services, additional professional services have come up. We appoint valuers, we appoint forensic auditors, we appoint company secretaries to provide such services to these companies as well. Also, IPs, now chartered accountant, CSCS qualified, can appear before NCLT and NCLET for their pleadings, for making representation for these insolvency companies, for any of the creditors as well. So these are the additional opportunities that have come up. This is a brief services which have newly come up, because new professional opportunities that have come up because of the insolvency code into operation. So all these services can be done. Even for vetting of claims, there are several agencies or several CA firms or the other firms who are providing services to vet the claim. So say if a company is having 1,000 claims, so in any case, the insolvency professional himself might not be able to verify the claims to their fullest or to in an effective manner. So in that case, also we appoint some other firms or other chartered accountant firm or any of the management firms who are actually providing services for vetting of the claim. We take support services from them. We cannot outsource the work in any case, but we take support services from them so that they can support us in doing this task of claim verification, and we can complete the CRP process well within the period of 180 days. So this is the beauty of insolvency law, that 180 days is the maximum time provided to complete the entire process, which I have like narrated right now in an hour. So this has to be completed in 180 days. Although there were several recovery mechanisms before insolvency code as well, like SARFAESI, DRT, all these are into existence as of now as well, but they take years to have the resolution of this company or to sell the assets of the company, of the defaulting company by the bankers. So this is the effective mechanism to have a resolution. But as such, that company is facing an insolvency. So why not to sell this company to some effective manager or the effective management who will take over this company and run in a beautiful manner? So this is the beauty of the insolvency code, which have come up since 2017. Thank you. And questions, if any, we can take up, Sagar.
Thank you, Sunish sir. So it was this insolvency profession is a less taken path by the practicing professionals, by practicing chartered accountants.